let's convene the finance committee meeting of the Capitalized Albany Corporation. First order of minutes, we have a first order of business is a review of the minutes from December 8th, and we have a proposed modification and document for you. Ashley, what is that modification?
Sure. So just from distribution on Friday, we had one minor edit on page 2 in the professional services agreement, CAC, IDA, CRC. I think the word grant administration was in there. This contract isn't related to grant administration. This is just IDA, CRC administration and how the staffing of Capitalized Albany serves as that for those two entities. So just took that out, revised that, and we're good to go.
Yeah, any get a motion first. Is there a motion?
I'll make the second.
Great. Any further discussion about the minutes? Okay, so with that modification, all in favor?
Aye.
Any opposed? Next up, we have our investment review. Who's gonna take that?
Thank you.
Great.
Thank you, Chair. Just ask the members to direct their attention to the materials beginning on page 5 for compliance memo and then a package from our colleagues at Cerity Partners. As a reminder, they will be here to present a brief annual overview of the upcoming board meeting. Some fair comments, please stop me at any point if you have any questions. As of 12/31/25, the investment portfolio totaled approximately 6.34 million. Investing conservatively, preserve capital, provide liquidity, and generate income. Portfolio is highly income oriented with 90% fixed income, 4% in cash, and just over 5% in equities, all within IPS limits. Portfolio is split between the reserve portfolio and liquidity portfolio, approximately $4.6 and $1.8 million respectively. Reserve portfolio includes a modest equity allocation to support long-term growth, while the liquidity portfolio is invested almost entirely in short-term, high-quality fixed income. Ensure funds are readily available for operations and projects. Credit quality and liquidity remain very strong. More than 83% of the fixed income holdings are U.S. Treasuries and CDs. Over 56% of the bond portfolio matures within 1 year, limiting interest rate risk and sufficient cash needs. The overall yield to maturity is approximately 3.7, providing steady income while delivering principal. For 2025, the consolidated portfolio returned approximately 6.1%, outperforming its primary fixed income benchmark. Reserve returned 6.9%, benefiting from strong equity markets, while the liquidity portfolio returned 4.2%, consistent with its low risk mandates. But again, Cerity, Bob and Alicia will be here at the board meeting to expand on these comments and provide an economic and portfolio overview for 25.
Is there anything exceptional in the reports from a performance perspective, an allocation perspective, a change in any material changes that they've had? Are they recommending anything?
No recommendations. They reviewed the IPS. They're happy with the constraints that we've imposed on them. I think they feel that given the boundaries of the portfolios and the mandates, they're performing, they're beating the benchmark. So I guess that's don't want to bury the lead there. They can always do more if we ask them to. But again, given the constraints, I think we're happy with the performance and again, their continued partnership.
Yeah, I think it's good. I mean, obviously being the benchmark is a good thing. And then we continue to benefit from short term, the short term yield curve, short end of the yield curve. So having our highly liquid, we actually get some return off of that. That's going to get more and more challenging if the prognosticators in the futures markets are correct and rates like that. Any other questions about the investment review? If not, we'll go into the quarterly financial report.
Okay. Right. Yeah, thank you, Chair. And again, please direct your attention to the materials beginning on page 22. Few opening comments. These are pre-audit values. We reserve the right to make non-material changes to the schedules, but these are substantially complete. We were able to onboard MMB as our new accounting partner, and we provided an expedited close. We closed in 5 days, which is orders of magnitude shorter than we're typically accustomed to.
What was it?
15. So we realized both cost and operational efficiencies as a result of the transition. Given that it's still kind of,
So far.
so it's illustrative of what we can expect going forward, though. I'm
Good.
confident in saying that.
Good.
So having said that, for the year ending December 31st, 2025, it's for the whole month. We recorded an income of approximately $78,000 compared with a budgeted surplus of approximately $579,000 in 2024. The variance from the budget was driven primarily by the timing of large grant receipts, most notably the $750,000 Flint Market Collective Grant that was not received, but is in process and final review, and expected to be dispersed by Q2 2026.
Q2.
Yes,
So we expected it last year.
yes,
So it's 6 months at least behind.
it is.
Okay.
Yeah.
Operating revenue totaled approximately 1.8 million, slightly above budget, supported by strong investment returns and unbudgeted loan interest income from payoff of the North Pearl Street loan. However, project and program revenue was $624,000 below budget due to deferred grant reimbursements, aforementioned, tied to Clinton Market and other active programs. Operating expenses were well controlled at approximately 1.6 million, 19% below budget, driven by largely by lower than expected staffing costs, although I will comment that we did maintain full staffing from May forward for the remainder of the year. Favorable professional occupancy expenses and these savings were partially offset by higher administrative costs, marketing event expenses, elevated project and program disbursements related to active grant programs and facility operations. The balance sheet remains strong. Investments increased to 6.3 million approximately. Restricted cash grew to 3.4 million approximately. And accounts receivable declined sharply, reflecting successful collection of outstanding grants, rents, and fees. Again, with the notable exception of the $750,000 ESD grant, which is in process. While unrestricted cash declined due to active project spending and capital activity, overall liquidity remains solid. Cash and cash equivalents ended the year at approximately 3.8 million, reflecting normal operating activities, scheduled debt service, loan repayments, and investment activity during year of elevated project. I'll pause there for questions.
Any risk in realizing that, grant payment on Flint Market Collective?
In what regard?
Isn't it deferred? Is that the deferred one that's coming in next? What payment, what grant payment was not collected this year, but is projected for next year?
The Clinton
Market
reimbursement.
Clinton Market reimbursement, and then
Yeah,
also
and
the smaller reimbursement.
Yeah, so staff from ESD has indicated that based on eligible expenditures, we would anticipate the reimbursement being about 694,000 as opposed to 750. That's due to the timing of reimbursable expenses related to the award of the ESD grant. So the project started prior to the ESD grant application, ESD award, and there's some of those expenses are not eligible.
So they don't look back?
They don't do a look back past a certain period you've done your application, so we will be short a little bit from anticipated reimbursement there.
So how much short? 70,000?
55.
56.
Can I ask a question
Mhm.
on the insurance? So you mentioned on the administrative expenses that the increase is primarily due to the liability insurance premium going up. We don't break out that number, do we?
Not
Anywhere?
individually, for context,
How much of an increase are we looking at?
and again, it's tough because our renewals happen mid-year, financials close obviously in December. We actually have an ask out to our broker right now, just for some industry intelligence, so we can kind of better anticipate. We did discuss, we were preparing the budget last year, so we did get some interim values, that's anywhere from 10 to 20%. We do have some expense sensitivity, especially around Liberty Park. As an example, 71% of our expenses for Liberty Park are resulting from liability insurance premiums, so.
Yeah, so I'm just wondering how much of it is Liberty Park, how much of it is the Clinton Market Collective, and if we at some point can somehow put those expenses into, and or get away from those expenses by offloading, when we offload those properties.
we'd realize significant savings in Liberty Park from the expected transition, whenever that happens. Clinton Market, basically, we're insuring it as a public plaza, and those liability rates are akin to any public venue, and the risks are elevated, and we're paying that premium. Unfortunately, it's kind of a carrying cost that we're committed to for the foreseeable future. I don't really have any other strategic commentary other than the future ownership of Liberty Park and Clinton Market. Probably independent of each other, Clinton Market probably more of a long-term building.
Do you keep project specific income expense statements?
We do. I mean, project specific, program specific.
Whatever. Mark collective.
Yes.
Report.
And this may not be the venue for it, but at some point, do we look at, similar, the Quackenbush building that we lease out, to Old English, do we look at maybe putting the Clinton Market Collective out for a potential lessee to take that over from us?
I think as we get traction around the operator, we engaged the initial operator in April, the secondary operator in October. I think a year's worth of successful operations, getting some more traction. I do have some stats on events and activity in the site for the fall, if anyone's curious. Liberty Park, though, again, pending the soft close finalization, we netted about $100,000 positive. 34 Hamilton, about $37,000 to the positive. Clinton Market was a net $72,000 loss, given the abbreviated year.
What time frame is that?
2025, the preponderance of Clinton happened September to December, though. Almost 2,800 visitors, 23 events. And we actually did, as a result of the fall event schedule, receive some significant interest, material interest in the shipping container leases. So we expect the shipping containers, so food vendors, to establish local vendors, which again, we haven't had concrete conversations, but we are progressing on that. So we expect the net to skinny down as the year progresses.
Does that conversations default to you guys, or does it go to our operator? Does the bid is our operator, right? Do they manage kind of the leasing of the shipping containers, or do we do it internally?
I think it's kind of done in concert. The bid was the one to forward the interest over. We had independent outreach to operators over the past year about setting something up more substantial and permanent for the spring. So I think given that the operations and the leasing are related but distinct, I think we have probably a closer role in maintaining the lease arrangements for the containers. Just because those are kind of significant brand operations that we want to make sure that we have a permanent, reliable, continuous operator.
As we look at Liberty Park and Hamilton, any operating issues out there? How's occupancy of the parking lots?
LAS maintains oversight of the lots. We were
Is
able
it
to,
a master lease or is it a performance-based lease?
it's more of an open-ended arrangement as opposed to anything that's time-bound, I'll say. I know that we have.
Meaning, like, are we on, do they pay a fixed amount or do we pay?
It's volume based.
Percentage is volume based.
And they take.
Yeah, so how's the volume?
Volume is up, actually. I mean, again, it's always a function of the events that we have down at the arena. We did have no NCAA tournaments this year, no real big ticket events, but we did have some, significant volume. There was a CrossFit event, which was big, and a couple of concerts. So I think it's, again, you have to look at the concert schedule for the coming year, but we did get a concession operationally, which saves us about $10,000 a year, which is significant in that relationship. And again, we're maintaining ongoing conversations about staffing and aligning the operational expenses to the projected revenues. We have had conversations with third-party vendors, just to kind of due diligence on the operational expense that, going to maintaining both the Liberty Park site and the Montgomery Street lots. And there is interest, but I guess we'd want to see about the timeframe about a potential transition and pivoting an operator arrangement for parking when the concession might not be exited in 18 months is a tough sell, but we have had those conversations.
Yeah.
Makes sense. How's Montgomery Street doing?
It's better, honestly. I mean, obviously the hotel helps. Common Roots having a consistent restaurant presence down there helps. We do have a portion of those spots are leased permanently to the hotel, so that's a consistent, kind of volume generator. We have realigned our rates to be more aligned. Keep using aligned, to be more in sync with the APA parking concession, which is immediately adjacent to that. So we have less of a premium, but there is still a premium on the spots that immediately abut the restaurant and the hotel.
AP is Albany Parking Authority.
Mhm. Yeah.
And do you keep, do you have a budget for these project-based budget for everyone going forward, and then you track them?
We do.
Okay, good. Anything else you wanna highlight?
Ashley?
Anything, anything more on the balance sheet or cash flow? Cash flow?
No, I mean, again, given the expediency of the close, I'm happy with the results. Again, and the results may change, nominal, between now and, the end of the month, but, given that we onboarded the, new provider and, we got him up to speed, almost immediately.
How's the quality of the materials?
Again, we're using legacy formatting right now. I think, given that we don't have a February Finance Committee meeting, that's gonna give us some one way to transition fully to the MMB platform and akin to kind of the selling from Great Point transition. We expect a pickup in the materials and it's not quite iterative, but we should see some improvements as the months go on. So open to feedback.
You told the accountants that we did this, right? They're there, so if they changed their audit scope at all to.
We had, sorry.
No, I just assume they'll look at this and the quality information and the. Veracity information, so we're gonna look at that.
One of the first meetings we held was with our counterparts at US1 Bonadeo. Zoom meetings, but this face-to-face, we could make it to apprise them of the transition and then to get their feedback on kind of best practice going forward to make sure nothing was skipped as a result. Again, we're happy with the results. Access is, we haven't experienced any issues.
Great. Any questions on the income statement? Balance sheet, cash flow? Okay, and then we also have a report of a property that's owned by the corporation, right? That's just a report. Is there anything?
Yeah. No changes for 2025. Just to remind everyone, this is a timestamp, as of 12/31/2025. This is the property owned by the corporation. And as I said, there was no transactions over the calendar or over the year. So this remains the same as the 2024 report. This is included, this is reviewed annually and posted on our website and included in the Paris and ADO materials in March.
Just a question and just my own edification. These properties are owned by Capitalized Albany. I assume that they're not taxable properties then?
A mix depending on if they're income generating or not. I think there's.
So there is water and sewer rates that are.
Sure.
We've got
That's a use tax, so
the use tax, right?
property school taxes in play.
For most, no. But
Big
there are,
assessment, I think, right, on some of them.
there is, so you have the ancillary taxes that are, you can't get away from those, but for the most part, these are immune from the typical tax one.
And is that because of who we are as a structure and entity? And I am asking this like I know in the not-for-profit world, if you own real estate and you operate your function in real estate, you're exempt from your taxes. And where if you go to letting life fallow or for alternative uses, you get taxed on those properties by municipality. So I'm just curious whether we're protected by our structure, our what we are as an entity versus the use of these properties.
I know that we just received the tax bills for 26 and they're not materially different, but I will scrub them just to make sure that the rates and the assessments are in line.
A little sensitive to what happened at Avila last year and a few other things to see with some not-for-profits if getting hit with
This
some.
will probably be a good topic in
I'm
executive
sorry.
session. Executive session is to talk a little bit about it.
Yeah, okay. I'll look for executive session. That's a good comment. Any further discussion about the reports? That's just a recommendation, right?
Yeah, if we could get a vote for the
Yeah.
positive recommendation of the
Do we
board.
get a vote?
Yeah.
We can get a vote.
Or
Motion.
Second.
And then we have our charter, any, changes to the charter.
This is the standard charter that you've had for a number of years. Looks like last amended on January 2016. No proposed changes by staff or council at this time, so you would review and make a recommendation.
Okay, and then we have a procurement policy, we think that's collectively. So any.
Yeah, I do have a couple tweaks to the foreign policy. I need to talk to.
Why don't we
Aaron
do the
about that.
charter first? Okay, you got a motion on the charter?
Motion.
Second. Any further commentary? Any opposed? All right, so let's get a motion on the proposed procurement policy.
Motion.
Second. All right.
And the only small tweaks, we modified this a little while ago for the levels, and so that, I think that's worked well, I think, for staff, correct me if I'm wrong, but that's been
Yes.
helpful. The only things in section 2, there's some references to general municipal law and state law. I'm not sure they're really relevant to us as a while we're a local public authority, we're not a political subdivision. So I want to take a look at those. Those may have to be modified, and I'll report back on that.
Yeah, I think we've used those as more of a guidance or a benchmark as opposed to what we're legally bound by.
Correct. Correct. And then there's like a stray sentence in paragraph 3C. I think it's the second sentence, third sentence, and I'm gonna suggest we strike that. And we can talk a little more in executive session on this too.
Can we talk process real quick? I hate to do this to everybody here, but we're doing this real early in the year at the finance committee. And I feel like the governance committee, we look, and maybe it's just a function of our schedules. But we end up looking at the same policy in just like November or October, as opposed to like
Backing up.
in the beginning of the year. It might make sense to look at this collectively.
I know statutorily, this one, there's a few, we have to do once a year
Yeah,
at the board. And so I'd have to look at the calendar, I'm
Yeah.
not sure, but do we do this as governance as well, Karen?
It's possible we do, yeah.
yeah, I think.
Yeah, by
both
both committees.
Easy, like,
Yeah. I mean, there's no need unless. We might maybe need to take that, I mean, we could pick one or two committees that are most relevant to those kind of policies. I'm not sure. Again, it's interesting for all the committees to look at it, but maybe it would be better aligned. We can look at that with the staff.
Yeah.
The board has to see it once a year by statute and approve it, so. How we get it to the board, maybe we could streamline that.
I'm not looking to have another committee meeting, but I just feel like if we're gonna do it, we might as well, especially if we're changing it, like we.
Yeah.
Try and get all committees to look at it. And then bring it to the board and then.
Yep.
Not have to look at it in October when we have so many other
Yep.
things to
Makes
do.
sense.
So you wanted to take this for further discussion, executive?
Yeah, I would like to do that, so maybe we could just table that and then
Table
come
that
out
out.
and.
Okay, so we tabled that, motion for now, pending discussion, executive section, and, John stuff is all of that stuff.
That's good.
Before we go on to executive session, is there any other business for consideration?
I have no other business today.
Andy C, Andy B?
Do not.
No. Nothing.
Unified crop.
Great. So we're gonna,
I'll make a motion to go into executive session.
Yeah, and at least one reason is to seek and obtain legal counsel, that would be one, which is exempt from the open meetings law, but is there any reason to talk real estate or anything like that, or?
Well, I think
Fill that
we had a
tomorrow.
real estate question earlier, so
Yeah,
Richard had I think, a real estate tax question, so.
yeah, probably still under that reason that I just
Yeah,
did. Counsel advice, yep.
all right, so there's the, motion, we have a second.
That's more fun.
We're back.
All right, great, so. Counselor, we're out of executive session, can you report on actions that occurred?
Yeah, there were no actions taken during executive session. The committee did discuss during executive session, the items that we discussed about in open session with respect to the procurement policy and taxable status of real property owned by the corporation. There is a motion, I know, first and seconded, I believe, on the table with respect to the procurement policy.
Yeah.
And there are gonna be a couple of very minor editorial changes to the policy. In section 1, the recommendation from council was to add a specific reference to a 501(c)(3) status. In section 2, we're gonna delete a couple of the referrals to laws that, in my opinion, are not relevant to capitalize Albany. And then in section 3, we're also gonna remove again some referrals to statutory language that's just not applicable to capitalize Albany. So that, subject to that, that's the motion.
All right, can we get a motion?
I've so moved to approve with those changes.
And what it is, it's a recommendation to the board to
Yeah.
approve. Yes, sir.
Yeah,
Thank you.
second?
Second.
Great, so any further discussion or clarity? No, I appreciate that level of detail, that's important. All those in favor?
Right.
Any opposed? Carried unanimously. Great. And we have no other business for consideration, so our next meeting is March 9th. Thank you very much. Very good.